Trading. Trading and investing. Well. I'm a little bit sick right now, but I still have to come through and record this video, record this audio, because I got some things to say today. It feels like it's that time for many reasons. So that's why I'm using my time this evening. It's really afternoon, but it feels like evening right now because it's cloudy. So, how do you know if trading is for you? How do you know if trading is for you? I feel like it's one of those things where people look at it as though you can get rich quick. You can pull up, multiply your money, and, walk away with a pot of gold. If only it were that simple. It is not that simple. There's many things that influence the market to move, and as fast as you can make money is how fast you can also lose it. That doesn't mean you shouldn't participate in trading per se, but this is the reality. If you want to figure out if trading is for you, you gotta look at the reality of what it is, and if you still want to face it after hearing all that, then yeah, see where that passion leads you. Because it's definitely not quick. It's gonna take some time for you to understand the charts and get enough of a grasp to be able to forecast where the markets may move, whichever market you're trading in. That doesn't take too long if you have the right guidance, or if you're just observing the market consistently. But then the part that usually separates the winners from losers when it comes to trading is the psychology part. Because it's the psychology. You reach a certain point in your journey where that's really the only thing that's separating you from consistently succeeding. It's gonna be different for everybody, but you need to master your mental, the way that you approach trading and investing, to make sure that you're not doing anything that would put you in a more risky position than you're already in. Because trading by itself is risky, since you're following a lot of short-term market fluctuations. The markets fluctuate a lot. So with that, you also need to and will build an understanding of how to manage your investments, your assets, your trades. All those things are one and the same. Trading is, the way that I see it, it's like actively wielding your assets. Investing is different in the sense that it's long term. You hold your assets and your investments for a long time, and over time you have steady growth. With trading, you have to be able to farm and harvest without losing too much of your crops in between seasons. So you need to have a certain type of temperament in order to trade. You can build that through discipline, and what works for me is journaling. I've been trade journaling for years, and it's helped me break out of negative cycles, both in trading and also in terms of my psychology. And it trickles over into real life. Just being able to, I don't even know how to put that into words. It's like, I'm not even gonna get into that right now. I'm not even gonna get into that. But you build your temperament to be calm. And when you take losses, and when you take wins, you can't get too excited. You have to be, you have to remain stoic and always be an observer of yourself in the markets, because the markets is very psychological, which makes sense because it's all speculation. All these numbers that we see is all speculation that's highly influenced by people's emotions, because people make emotion-based decisions when assessing the value of something. And that's combined with the true value, the true intrinsic value of certain markets and assets. So you see inflation of prices in certain areas where like something could be valued the S&P 500 has just been going up and up and up since the pandemic. There's no way that all those companies are being truly like their value is truly being assessed. Part of it is just the hype from money flowing in, and people just putting money into different investments. And like I say, crypto, you see it more, because with stocks, there's at least earnings reports and aspects of the business that you can research, and the company will make money itself from its business ventures. So if it's doing well every quarter, then naturally the value of the stock is going to go up. But it just gets a little bit overinflated when people start to overestimate what the company is worth and what it can do. And crypto has that a lot more, where meme coins are released. A coin that has no real utility or purpose. There's coins that do have utility and purpose, but it's usually the meme coins that go up and then boom, gone. Because people are just following the hype. They're like, oh, like there's this new coin out, it's going up, let me get in. And then everybody wanting to get in is what makes the price go up. And then when people want to get out and take their money out, they're like, oh, let me cash out. That's when everything starts dropping, because other people see the market dropping. They're like, oh, let me cash out right now too. And then it tanks, and you can lose a lot just from getting caught up with that. So there's a lot of things to be aware of, and it's safest to be in a very like being at the eye of the storm. That's what we'll call it. Just, you need to be able to observe yourself and everything around you and approach calmly and make informed decisions. And you're naturally going to make mistakes, so you need to be able to take a loss and make something better of it. Because with every loss that you take, you can learn something. From trade journaling for years, I just consistently been like learning myself in the markets, and so I'm speaking from experience when I say that. So if you feel like catching losses periodically and or losing and not knowing why you're losing would make you crash out to the point of you wouldn't be able to get through your daily life, you would get extremely caught up on your loss and be like, damn, like what do I do? How do I fix this? And you feel like that would make you spiral negatively. And you're also in a position where like you're just trying to like make money as soon as possible, and like you see trading as a vehicle. I think that is best if you don't do it, because It's all about your mental approach. Your mental approach can put you down a deeper hole, kind of like a whirlpool. So it's really how you approach things, because I get obsessed over my losses, but it's not in a way where it's ruining my day. I'll just question what exactly was my reason for loss. For one, just like looking, saying okay, and then seeing what I did right and what I did wrong, and make a note of that, and then keeping it pushing. You have to be detached from the outcome, and as a result, you can't risk more than you're willing to lose, and you have to be consistent with whatever amount you're risking too. And the risk management aspect of things, that's another part where you gotta figure that out too, and it can be difficult, but I see that you can make the numbers work for yourself in any way you want, whether you want to risk like however much percent per trade, or find whatever way to like get a consistent value that you can risk for reward. You'll be good. Just make sure you have a system for making sure that you don't spiral into further loss. Like if you're losing multiple trades in a row, maybe it would be best to cut your risk in half after a certain point, and then after you win back a trade, then you can go back to normal. Just different things like that to account for human error, because it's very easy for human error to happen. So that's something you gotta accept too. This could be a long journey. Regardless, it's a journey. If you're aiming to do this, then you must understand that this is a long journey, because it's a lifestyle. You can decide how to create that lifestyle for yourself. You don't have to be in front of the charts all the time. I feel like that's a misconception too. That's only for like if you're obsessed, you just love the markets, or just like to scalp, or just always studying. And I have to warn you about that too, because that's me. But it can result in over participating in the markets, which can lead to unnecessary loss. It's really not set up for us. I'm not gonna cap. It's really not. It's set up to for you to mess up. So like with all the odds being against you, if you still choose to do it, then I suggest that you just like keep going, man, and aim to just improve by the day. Because as I was saying earlier, it's a journey, and you decide how you want to approach this. You decide it, and you never really know like when everything is gonna click. It's different for everybody. And if you're focused on trying to make it click by a certain point, there's a chance you could drive yourself crazy and make rash decisions. You have to do what you can not to put yourself in a mental state of mind where you're trying to make up for whatever losses or whatever feelings you might have, and you don't want to be emotionally reactive, because when you're reactive in that way, it clouds your judgment and your actions, and you don't realize it until afterwards. It's a lot of things that you need to balance as a trader, but this is partly why I still do it, because I've grown so much as a person just from doing this, and my perspective on everything has expanded and continues to. And as I dive deeper into understanding the economy and how everything works, I start to I'm feeling like I'm seeing a lot now. I'm seeing a lot. And I'm grateful for the awareness that I'm getting. So if you decide to trade, start with a demo account and see how you feel. Don't place trades with real money until you have confidence in your abilities and have a game plan. Otherwise, you're better off not doing it. It doesn't make sense to put money somewhere where you don't know if you'll make it back. I mean, I guess that's the risk, but if you're literally operating with no form of knowing, with no way of trying to get like controlled and consistent results, then it's not worth it. You know, trading is gambling, because you're betting on different outcomes, and the more factors you have to make a good decision, that risk is reduced. And you want to aim to take the setups where you feel the most certain, because then you'll have a consistent win rate, enough for you to at least be profitable. You don't have to be in the markets consistently. You can just aim to be deliberate with the trades that you take and where you enter. You'll be good to go. But overall, you should look at this as how people look at getting a degree in school. It's 4 years. Give yourself like 4 years and see where you're at. And keep aiming to elevate in your understanding. Continue to observe the charts and study the candlesticks, and make note of what stands out to you and the things that you discover. And you can end up learning the markets very deeply depending on how far you want to go. It's all up to you. There's a lot of data that's been printed out over these past several decades. So you can get a mentor where you can, just figure things out on your own. Not that it's easy. There's different. You can also get inspiration from finding different creators. And hey, maybe you can try out different mentorships. It's up to you. Just know that there's a lot of information in this industry that's always being passed around. Some of it isn't as valuable as it's inflated to be. Some of it is just like regular concepts like support and resistance. But if you're not using a real form of support and resistance where like the market is consistently reacting to there for a reason, then you're really just drawing lines. And there's people that will trick you into believing that they know what they're doing because they know how to draw lines. You need to be careful, because there's a lot of trickery in the spaces of finance. People trying to make money off of people's ignorance and misunderstandings of the markets, or the will to understand the markets. So take everything with a grain of salt and aim to backtest any information you come across to make sure that it actually tracks. When I say backtest, I mean going on TradingView and pulling up a chart and just testing out the strategy or concept that you learned about or that you're thinking about trying, and see how it plays out over time, if it works out or if it doesn't. And that'll give you the most objective understanding of the markets over time. So whether or not trading is for you to decide. And it's not easy, but nothing good comes easy. I mean, this is a skill set where if you can figure it out, you'll be able to print money. Like, that wouldn't be something that's easy for anybody to accomplish. And there's different ways you can go about doing it. It's really a matter of your mentality. If you want to make it happen, then do what you can to make it happen. But also be real with yourself. If you're trying and you're not making any progress, there's got to be a reason why. You have to face all your shortcomings and setbacks head on, because that's the only way that you'll keep progressing forward. If you don't, then you can end up running in circles, losing money and time and not knowing why, or not even realizing it happened, which is even worse. So if you're not where you want to be after some time, you have to look at yourself in the mirror. If you keep on ending up with the same results, if you keep on making the same mistakes, you have to ask yourself why. And yeah, trading is very doable. It's actually simple when you get the hang of it. The less you complicate things, the better. But the issue is we're human beings, and human error happens. We naturally complicate things. So yeah, that's why some people program trading bots. That's something you can look into too. There's different ways to get into trading, whether you want to do it directly or you want to have a bot do it for you, or and there's also different markets that you can try out, different because crypto moves different from currencies, which moves different from stocks. And there's correlations between all the asset markets to an extent, some more than others. Some move more aggressively, while some moves more steadily and slowly. So wherever you choose to trade will also determine your success, because you gotta choose something that matches your pace, you as an individual, what you're looking for. Because for some people, they rather just trade stocks. You know, the market opens at 9 a.m., 10 a.m. Yeah, the market opens at 10 a.m. It moves until like 3 to 5 p.m. And you do what you gotta do in that time period, or hold it over the course of days, because you know it's gonna steadily go up or down. And when it comes to trading currencies, it's more volatile, because it's literal money circulating. The money is moving at all times, so the prices fluctuate a lot more. And when you look at currency pairs, you'll notice that they move more aggressively than just the futures by themselves. Like if you look at the dollar index compared to USD JPY, or euro compared to euro USD, they move similarly, but there's some differences. And that's why with currencies you're able to trade on lower time frames, like down to like the 15-minute if you wanted to. But trading on lower time frames, you gotta be careful. It's usually best to see what's happening on the grand scheme. You gotta take a step back and see it, be an observer. So yeah, whichever market you choose, that's a part of your success too. So if you want to figure out if trading is for you, I hope you just take all of this into account. And yeah, be objective. Don't crash out, because these markets make a lot of people crash out. If you feel like that would be you, be honest with yourself. And there's many ways to get rich. So if you want to get rich, you can do that other ways. If you have a passion for this and understanding the economy, the markets, how money moves and how it works, and how human psychology plays into all this, then yeah, trading might be for you. But there's also more that you can derive from trading. This is just my perspective. So within all that, you can still find something that you want. You essentially just need to define what you want for yourself and see if this is a worthy pursuit. Because yeah, and that goes for anything in life, really. Define what you want for yourself to make sure that what you're doing is worthy pursuits and you're not wasting your time and energy. Because I wouldn't want you to spend years in the markets trying to, like, with one foot in, one foot out, like, okay, I'm gonna figure this out, not realizing that this is a whole rabbit hole, and if you're not actually dedicated on figuring this out, then you end up just wasting your time. I wouldn't want that to happen to you. You can do a lot. Like there's other ways. Like right now in 2025, there's a whole AI revolution it's been brewing, but it's about to take off. So even if you want to tap into that somehow, but yeah, the decision is for you to make if you want to decide to trade.